material to the underwriting of the policy. It would have affected if they would have offered me coverage or not. That material misrepresentation, that statement, now becomes a warranty, an absolutely true statement upon which the validity of the insurance contract depends, because they kind of depended on me telling the truth about my big health problems, which means I have just committed fraud and it could void the contract. Now, concealment is just hiding facts. I might not be coming out and lying, but I might just be hiding those facts. Next, we're going to talk about a premium receipt. The most common type of premium receipt is a conditional receipt. In this video, we will talk about conditional receipts. A conditional receipt is only given to insurers who pay some premium with their application. With a conditional receipt, it says coverage could be effected as early as the date of application if it needs to be, as long as they paid their premium and as long as the insurer would approve them anyway. It is intended to provide coverage on a date earlier than the date of the issuance of the policy. So let's take a look at a scenario here. We have Bob. Bob is the agent. Bob is completing an application on Jane. Jane is going to be the proposed insured. At the end of the application process, they both sign. Jane gives Bob a check for at least the first month's premium. In return, Bob gives Jane a conditional receipt. Remember, the conditional receipt, the whole purpose behind a conditional receipt at this point says that coverage could be effective as early as the date of application if it needs to be, as long as she's paid that premium and as long as the company would approve her anyway. So let's look at the scenario. Jane is driving down the road on a leisurely Sunday drive, and all of a sudden, bam, here comes this deer out in front of her and kills her. Well, the insurance company, they haven't completed underwriting her policy. Underwriting would continue as long as they would have approved her anyway.